Bitcoin is no longer the outsider's bet. It's quietly becoming the blue-chip asset that even the most conservative endowments can't ignore. But here's where it gets controversial. The very institutions that once dismissed crypto as rat poison squared are now the ones quietly stacking billions in exposure. Are they hedging, capitulating, or simply acknowledging that the market has matured faster than anyone predicted? Wall Street's second quarter 2025 13F filings read like a love letter to digital assets. Instead of buying Bitcoin directly, which still triggers compliance headaches, Titans are pouring money into regulated wrappers, spot ETFs, and crypto-adjacent equities, turning indirect ownership into the new normal. Brevan Howard, the macro hedge fund famous for trading everything from Italian bonds to Vietnamese coffee futures, nearly doubled its position in BlackRock's iShares Bitcoin Trust, IBIT. The fund now holds 37.9 million shares, worth north of $2.6 billion. That single line item makes Brevan Howard one of the largest institutional Bitcoin holders on the planet, shoulder to shoulder with Goldman Sachs, whose combined IBIT and Fidelity Wise Origin Bitcoin Trust (FBTC) positions ballooned to $3.3 billion. Goldman didn't stop there. It also revealed a fresh $489 million slice of the iShares Ethereum Trust (ETHA), signaling that digital gold isn't the only game in town. Universities, banks, and sovereign wealth funds are piling in too. Harvard University, yes, the same endowment that once shunned anything riskier than a municipal bond, now lists a $1.9 billion IBIT stake. Across the Atlantic, Abu Dhabi's Mubadala Investment Company holds $681 million in the same ETF. Closer to Main Street, Wells Fargo nearly quadrupled its IBIT exposure to $160 million. While boutique broker-dealer Cantor Fitzgerald crossed the $250 million mark and sprinkled extra capital into MicroStrategy, MSTR, Coinbase, Coin, and Robinhood, Hood. Jane Street, the high-frequency trading powerhouse, disclosed that IBIT has become its single largest holding after Tesla, totaling $1.46 billion. Simultaneously, Jane Street trimmed its FBTC position and doubled down on MicroStrategy, illustrating how nimble traders are tactically rotating within the crypto ecosystem. And this is the part most people miss. The buying isn't confined to U.S. borders. Norway's $2 trillion government pension fund Global quietly increased its indirect Bitcoin exposure by 192% year over year, simply by holding more MicroStrategy and Coinbase shares. Even though the absolute dollar figure is still a rounding error for a fund of that size, the directional shift is unmistakable. Sovereign wealth is no longer allergic to crypto. What's driving the stampede? Three forces converged in Q2 2025. 1. Regulatory clarity. The SEC's approval of spot Bitcoin ETFs removed the will they won't they overhang that kept fiduciaries on the sidelines. 2. Liquidity depth. Daily volumes in IBIT and FBTC now rival those of the largest SP 500 ETFs, making billion-dollar trades feasible without moving the market. 3. Portfolio construction. Correlations between Bitcoin and traditional risk assets have fallen, allowing allocators to treat crypto as a bona fide diversifier rather than a leveraged tech trade. Brevan Howard's expansion is emblematic of a broader institutional blueprint. Its BH digital arm already manages multiple billions across blockchain infrastructure, decentralized finance protocols, and tokenized real-world assets. The latest 13F filings merely capture the tip of the iceberg. Behind the scenes, capital is flowing into staking validators, Layer 2 rollups, and even decentralized AI marketplaces. In other words, Wall Street isn't just buying Bitcoin, it's buying the rails on which tomorrow's digital economy will run. So, Is this the final capitulation? And more provocatively, if Harvard and Norway's pension fund are long, does that make retail traders the new contrarians? Drop your take below. Are these institutions geniuses front-running the next supercycle? Or are they late to a party that's already priced in? Let the debate begin.